But I take comfort as a gold and silver investor in knowing that silver and gold always do a full accounting for the expansion of debt-based fiat currency. They just always do that. Sometimes it takes a little bit longer than we expect, but going back millennia, that's what gold and silver do. And they tend to be the prime beneficiary of all the things that we're seeing right now in this exact environment. So, volatility in precious metals doesn't bother me at all. I think we're going much, much higher. And then I've got a longer-term investing account starting with physical metal that I'm holding for the long term. Triple-digit silver, 10,000 plus gold. I think that's coming down the road. Then I've got a basket of royalty stocks that I'm planning to hold until silver reaches at least 50, gold, around 3,000.
Steve Penny, the founder of the Silver Chartist, recently appeared on Commodity Culture, where he discussed his perspectives on various commodities like platinum, silver, and gold. During an interview, Penny explained that silver and gold have always reflected the expansion of debt-based fiat currency. He highlighted that they always account for this expansion, although it sometimes takes longer than expected. Throughout history, gold and silver have consistently been the ones to benefit the most from this type of economic environment. Penny mentioned that he is not bothered by the volatility in precious metals and believes their prices will rise significantly. Penny also believes in the possibility of factors that can prolong the bull market for precious metals. He expects new all-time highs in gold and silver, but certain developments such as breaking below key moving averages or the Fed continuing with a higher-for-longer approach may impact the timeline. Regarding platinum, Penny expects its current historic anomaly of being cheaper than gold. He believes in mean reversion and sees potential for platinum to outperform gold, either by a factor of 2 based on historical averages or even by a factor of 4 based on previous price ratios. We will now bring you clips from Steve Penny's interview with Commodity Culture. But wait, there's more. To stay updated with all our future uploads, make sure to hit that subscribe button and turn on post notifications. Thank you, and enjoy the video.
So from a technical perspective, I think the low happened last fall, September-October timeframe, when silver dropped down to $17.40. From a technical perspective, we've seen higher highs and higher lows since then. And a lot of people in our camp maybe say, technicals is a bunch of mumbo jumbo. I totally get that. But the institutions, the high net worth individuals, Wall Street people, the generalists, they look at technicals. So we should too. And what they're going to see when they look at a chart is a series of higher highs and higher lows, prices above a rising 200-day moving average. That's an uptrend. And this technical posture tends to put those trading algorithms into a buy the dip mode. So I'm personally positioning myself to use that as a tailwind. So when we get deep oversold pullbacks to support, I think those are fantastic buying opportunities. And I think we're pretty close in silver. From a technical perspective, big support down at 22. If we get towards 22 in silver, I think that would be just a fantastic opportunity. I'm keeping some cash on the side. Same thing for like 1810 to 1820, 1830, somewhere in there in gold. Not predicting that we go that low, but it's a possibility, and I want to have some cash available if we do. I can see things that would prolong this bull market. I'm expecting new all-time highs in gold and probably silver this year. But let's say we broke down below the 200-day moving average in silver and or gold, and we started making lower lows. Even though that wouldn't invalidate the longer-term price projections, it could mean that this drags on longer than we expect. Also, my baseline expectation is that the Fed's going to pause on their rate hiking campaign at either this one or the next meeting, sometime soon or in the next handful of months. I think that's going to be a tailwind for the metals. But let's say that doesn't happen. Let's say they stick to this higher for longer narrative. That could delay the precious metals bull market. I think that's an unlikely outcome, but those are things to watch out for. That's why these Fed meetings, as asinine as they are important for us to watch from a timing perspective. I put about 20% of my physical metal in platinum, but I'd say there's 3 kind of pillars to the investment thesis for platinum. Number 1 would be its undervaluation relative to other hard assets, namely gold. I mean, platinum historically almost always trades at a premium to the price of gold. The price of platinum is almost always higher. Well, right now, not only is platinum cheaper than gold, it's about half the price of gold. That's a historic anomaly that you don't see very often. But the principle of mean reversion is powerful. So if we revert back to the mean, platinum would outperform gold by a factor of roughly 2. But if we go to where we were, I think in 2011 on that ratio, it might be 2008, if memory serves me correctly. Platinum traded at twice the price of gold. So that would mean platinum could outperform gold by a factor of 4. And I like that because then I can potentially trade my platinum for a lot more gold down the road. So that's number 1. And other investors, I think contrarians are beginning to kind of wake up to that, how cheap platinum is.
the U.S. economy is confronting a myriad of challenges, encompassing elevated levels of debt and leverage, the prospect of rising interest rates, and the looming possibility of a deflationary spiral. These multifaceted challenges have the potential to precipitate a recession or even a depression. During the interview, Penny underscored the significant impact of interest rate increases on the government's interest expenses, estimating that each 1% rise translates to an additional $300 billion or more annually, given the colossal $32 trillion national debt. Penny holds the expectation that the Federal Reserve finds itself in a precarious position. On one hand, they can opt to raise interest rates in a bid to curb inflation, which in turn may trigger a recession. On the other hand, they can maintain low interest rates, which may foster further inflationary pressures. Nevertheless, there is no doubt that the current economic landscape favors gold and silver. Both these precious metals are regarded as safe haven assets, known to thrive in times of economic uncertainty. As a result, the prices of gold and silver are anticipated to continue their upward trajectory in the years to come.
I fully agree with Peter that this is a major story that's not getting enough attention, this whole trend of de-dollarization. But that doesn't mean it's imminent. Just by way of review for your listeners, back in 1944, we had the Bretton Woods Agreement. Dollar became the world's reserve currency. And then in 1971, we almost lost that as we came off the gold standard. But then we sent Henry Kissinger over in, I think, 1974 to negotiate the petrodollar system, where now you need dollars to buy oil from OPEC. And, those proceeds get cycled back into U.S. treasuries. So all that to say, with that backdrop, this petrodollar system has created this tremendous worldwide demand for dollars. And now we see OPEC, namely Saudi Arabia, starting to sell their oil in other currencies. They're talking to China, even working out potential peace deals with Iran. So this is all bearish for the dollar, and we see the dollar as a percentage of world, reserve and transactions declining. But it's a slow, steady decline. It's not like it's falling off a cliff. That could happen, but that's not my baseline scenario. I think it's this kind of long, drawn-out process over the handful of years at least, where the dollar no longer becomes the world reserve currency status. You can also go back to England when England lost its world reserve currency status. It happened over decades, not like months. There's a tendency to overly complicate the situation here. And what it boils down to is right now we are the most over-indebted, overly leveraged. The country has never been more over-indebted, overly leveraged, both on a federal level and individuals. And when you raise interest rates at the fastest pace ever, with the backdrop of the most over-leveraged system ever, things are going to break. It's not rocket science. And with a $32 trillion national debt, every 1% rise in interest rates is another $300 billion plus in interest expenses that the government has to pay for every single year. So these interest rates are going to break things. And the Fed is approaching a point where they're going to either have to sacrifice the dollar and let inflation run hot, or continue to let things just break and have massive deflation. And history suggests that that's the last thing they want, because then the finger of blame gets pointed right at them, where if they go towards debasing the currency, debt monetization, people don't understand it. And they blame all kinds of people, but they don't blame the people who actually caused it. So I think we're going to see more bailouts, more quantitative easing, more dollar debasement, and that's going to be the primary trend for the next handful of years.
Looking ahead, the prices of precious metals are expected to be influenced by their role as safe haven assets during periods of economic uncertainty. Investors seeking stability and protection against potential economic downturns are likely to maintain their interest in gold and silver. Given these factors, the future outlook for precious metals appears promising, particularly for those who prioritize long-term growth and value preservation. So what are your thoughts on the future of precious metals as safe haven assets in the face of economic uncertainty? Please share your comments and observations in the comment section below. Additionally, if you found this video informative, don't forget to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.